Good afternoon and welcome to today's member-only webinar where we look at ASX investment opportunities in review for the 25th of January, and I'll take this opportunity to wish everyone a happy Australia Day tomorrow. The information or any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which incorporates our model portfolios, access to both ASX and US equities as well as ETFs. Also an independent portfolio where we can work in partnership with you to execute ideas that we jointly agree on, and we can utilise derivatives to enhance portfolio returns. If you'd like to know more about the broking account service, please call me on 1300 614 002. The technology that we're using today is the Investor Signals member area. If you're joining us for the first time as a trial subscriber, you have access to the free trial for 30 days. At the end of the 30 days, you can join for $1,320 for the year. Whether you're on trial or existing client, don't hesitate to give me a call at any time to discuss our investment strategy or how to best navigate your way around the technology and get the most out of it. Up on screen's a graph of the Nasdaq, continues to power on to new highs. The driver of this is optimism around a recovering earnings picture. Where we sit at the moment in the beginning of essentially here at Q4 2020 earnings starting to come through, and as they we've only delivered about 45-50 companies of the S&P 500. We have a busy week this week of US earnings, and I'll update you on the blog of the key results as they come through. But what we're looking for is whether S&P earnings can deliver the equivalent of $40 of average earnings for the Q4. What the market's then looking for is a re-acceleration into 21 of $168 of earnings per share, and then another 20% increase in 2022 up to 197. Again, remember back to 2018 and 19 earnings were tracking at about $160. So not only do we require things to re-accelerate from where we are at the moment back to where we used to be, we're then looking for another 20% on top of that. So whether the economic policies can provide that level of stimulus for equity valuations, or it's not so much a valuations issue, because what we're seeing is valuations rise but earnings not. So it's a PE expansion, and what we need to do is see a catch up in earnings to justify the high PEs. That puts in context the Nasdaq, and we're always mindful of the stretched PE valuations in certain pockets of the market. And with that, let's open today's recording with a closer look at the Nasdaq. So the support line I've shuffled up here. So support I've put at 13,463. As long as the market sits above that, you should be comfortable buying into algorithm buy signals, and we'll look at those preferred or the high conviction opportunities in today's recording. As soon as we see that Nasdaq roll over, break below the average, then we'll start to reassess the short side of the market. But for the moment, we stay focused on where we see reasonable risk reward opportunities within the ASX top 100. So with that, select ASX 100 from the drop down list. We get the percentage gains to the top. We organise them in buy orders, so I'm going to toggle through all the stocks that are under buy signals, provide you commentary around those, and then we'll get partway through the list and I'll highlight when it switches from stocks that are under buy conditions into stocks that are under sell conditions. In order for a stock to be under buy conditions, you'd find it in the model portfolio, whether it be in the top 20, top 50, 100, depending on obviously its index participation level. But with that, the first stock that we're covering this evening is TPG. We've been bullish on this coming into the upcoming earnings, which is around about the 10th of February. We're starting to see that trade back up to where we think's fair value, which is about that 775. So I've been long that off this $7 support level. Continue to like TPG, that trends higher. IDP is a new addition to the index to the ASX 100. It was only added in the December period. Um, it looks to. I'll put a blog on the post tomorrow where it summarises the F year 20 earnings numbers. There's nothing there that looked particularly impressive to me, and the stock trades on a high PE, but we'll continue to review the fundamentals there a lot closer. Iron ore remains strong, so we still stay bullish. Fortescue, BHP, Rio. You can maybe think about trimming some and taking a little bit of profit in those names, but for the moment, iron ore remains well supported up in the $160 a tonne plus. Appen Group's had the sell-off following the 30% earnings downgrade. I just draw your attention to the fact that we've now got the it's under algorithm buy conditions. We essentially have the trifecta, if you like. We've got the algorithm buy condition, we've got the positive green arrow, and we've got the price above the moving average. Now, if you're into short-term trading in the market, they're the conditions that you look for. You would stay long this stock as long as it closes above the average. As soon as you get a close below, you would get out of it. And that's if you're looking for opportunities in the market for sort of number of days or number of weeks. If you're looking for more of a longer term investment portfolio, look at tracking our model portfolios, which are based off the primary algorithm signal. But Appen Group may find support at around $23. JB Hi-Fi continued to deliver a terrific result, one of the better performing stocks in the model portfolio. Altium Group, another one of these technology names where we've got, it's under buy signals, it's got the positive green arrow, it's poked above the moving average. The stochastic's trending high. If you're looking for a short-term trade, you could sit on the long side of that, again with a stop loss if it broke below the moving average, but certainly more for traders than it is investors there. WiseTech, algorithm buy signal, green arrow above the moving average, trending higher. Not a stock that I follow the fundamentals on closely, but clearly getting some good buying support there at the moment. Wesfarmers, we're overweight Wesfarmers in our model portfolios and in our high conviction account, and it's really proving to be the right exposure. Wesfarmers is a unique Australian e-commerce story. They got product mix across from Catch through to Officeworks to Bunnings, and I see Wesfarmers going from strength to strength, and you want to be a buyer of that on any pullback. Coles, low interest rate environment, should grow earnings high single digits under buy conditions, positive green arrow there. Buy it. Think about selling calls if you're looking to generate extra income. Goodman Group was added into the model portfolios following the switch to buy conditions here at around $17. So we now hold that in, I think, both our top 20 and top 50 index. Afterpay, hard to keep chasing this at the moment at 35 times revenue. Obviously, terrific product and getting great client acceptance, but from a valuation standpoint, you have to draw parallels to trying to determine what Tesla's worth. So it's at risk of a heavy selling should we see sort of a correction in these PE names. Now, interestingly, Illumina's shifted back to algorithm buy signal, so you can see there I've shifted the resistance line from $2 back down to there. We'll delete that reference there, and now this comes onto the radar at around this $1.70. Analysts remain fairly bullish here on Illumina with targets back up between 2 to 225, so you could start to keep a close eye on this. Investors will add it into portfolios at the moment. Traders may wait for a cross above the average or for that stochastics to start trending higher. Car sales we like. Recognise that high quality business, it is a little expensive, but likely to not have a lot of downside risk from where we are at the moment. So owning it there at $19 makes sense, and we've got that in portfolios. Fisher Paykel, we've been patient on these healthcare names. They've underperformed as the Aussie dollar's strengthened, but you're now starting to see the Aussie run into some level of resistance. It's not really pulling back, but it's given the breathing space for some of these healthcare names to start to rally. Part of that is confirmation of strong earnings growth that was announced can't recall the specific numbers, but Fisher Paykel delivering double-digit earnings growth. I think almost close to 20% EPS growth, supports the high PE valuation that the stock trades on. But we were bullish this one at $28, now pushing up to 33. We hold that in model portfolios. REA Group looks a little expensive, but obviously terrific technology business. If we go back to the original switch from sell conditions to buy conditions, added into models around that 108 level there. Ramsay we like. This is a sort of safe harbour if volatility picks up, but the conditions there from a technical standpoint are starting to be met with a positive green arrow activity above the moving average. But it'll be interesting to have a look at the upcoming earnings result there for Ramsay. Maybe a rally back to 65, 68 and then sell covered calls for Ramsay. APA Group, this selling's been a little relentless here. We're now back down to around $9.50. I still like this business. I've put a support level in there at around $9.40, looking for a more comprehensive break above that average. But I think there's a buying opportunity there at $9.50. Sonic Healthcare has been part of the healthcare basket that we've remained bullish on. It's an important holding in portfolios, and we've seen that rally off that 31 level now up to 35. At around $36, you could think about selling calls if you're looking to generate extra cash flow. Charter Hall, all I'll say about these property stocks at the moment is in general we're seeing buying signals, whether it's across the ETFs or the individual REITs. We're seeing a large increase in buying activity. Goodman Group still clearly the best quality, but you are paying a high price for it. So if you're looking for exposure to property, have a think about just some of the ETFs, and I'll make a post in the next day or two about that. Computer share support there at around $14, but I'd like to see more evidence of the earnings improving after the downgrades that they've had for the last 24 months. AusNet, we're not really doing too much there, but it is under algorithm buy conditions. Cochlear we like. At around 180, we saw the break back through this moving average there at 188, now pushing up towards 200 for traders. Stay long the stock as long as it stays above the moving average. We hold that in model portfolios. A2 Milk, clearly this has been a tough area of the market to be in. It's been impacted by distribution into China. It's had 2 earnings downgrades, but the stock price has fallen more in percentage terms than what the earnings downgrades represent. So we continue to watch this, and I'd be surprised if we don't start to see some level of compression there in price and a breakout. Whether there's still another earnings downgrade to come is a little bit hard to tell at this stage, but there's upside opportunity there in A2 Milk. The index, will come back and revisit that in the context of the XJO at the end. CSL, we've added this into models. The retracement from 320 back to 270 creates a buying opportunity. It's under algorithm buy conditions, has the green arrows, stochastics pointing higher, and price activities above the moving average. Domino Pizzas continues to expand, in particular in Japan, but earnings came in above analyst expectations, and we're seeing that rally higher from the original algorithm buy signal there at 72, now pushing up towards 91. Lendlease, higher risk proposition here at the moment. You're really playing a long game in a recovery sense of the global economy. Lendlease for the most part focus on high density living. No doubt that with the COVID impact, we've seen a slowdown in unit sales globally. I suspect we'll see that reflected in the upcoming Lendlease earnings result. But if the market was looking out 12 or 24 months, a story should still be in place there for Lendlease, and it could be a recovery opportunity for the market. Gold we continue to like, although it's chopped sideways. Preference still remains probably Saracen, Northern Star, Evolution, Gold Roads, but Northern Star and Saracen. Evolution comes onto the list now. It's under algorithm buy conditions. Also considered GDX in the ETF market. ASX corrected from 92 down to 71 on softer trading volumes, in particular in the derivatives market. But it is a critical infrastructure business, really, is the way to think about it. on a reasonably attractive dividend yield, 100% franked dividend at around this $71 level. It looks like it's getting pretty close to a point where it's going to break out and trade higher. So you want to own the stock, and if you want to get aggressive, buy call options, so not covered calls. What you're doing is going long call options, or even doing a long bull call spread, which if you want to know more about those type of option strategies, please call me and happy to discuss that. But we like ASX. Cleanaway, the CEO there, pretty sure it was the CEO, stepped aside, so we've seen the stock fall from 260 down to 230. Not sure that there's anything too sinister behind that, so we'd be buyers of the dip there on Cleanaway. It still sits in our model portfolio. Next DC under buy conditions, but I do struggle with the fundamentals there, and I've discussed that in prior recordings. ResMed, bullish on this now. The last earnings result surprised on the upside, supported around this $27. It's under buy conditions, green arrow, and the stock price is above the moving average, so suitable for both trading and investors to be thinking about that in portfolios. Sydney Airport's difficult to get visibility around earnings. Price gap's been filled back down to 606. It's probed a little bit below that. Keep an eye on the stochastic would be my advice here. Wait for the black line to cross through the red, and you could be getting close to a point where there's actually a value opportunity developing there. Link Administration, I'd raised this as an opportunity on the blog. Short-term traders may just be taking profit off the back of the weak day today. If you want to be a bit more patient, you'd stick with it as long as it stays above that moving average. But obviously, Link has been subject to that takeover deal that they've rejected. Aristocrat Leisure's been added in a model portfolio, support there around $30. Be interesting to have a look at the upcoming earnings result. Amcor, like ASX, I think this is a really important one for you to add to your watch list. A break above that moving average, so either buy the stock, start accumulating it, or if you want to get aggressive again, look at those bull call spreads, or just buying an outright call option to add leverage to the upside without sort of taking on additional downside risk. Your risks confined to the cost of the call options. So again, if you'd like to discuss that call option strategy on Amcor, please give me a call. GPT, part of this property basket group that's now flashing algorithm buy signals. So we know the current results coming through are going to be quite poor, but what the market's positioning around therefore is, are we getting closer to the end of the pandemic than the beginning? And part of that's obviously driven by hopes around vaccines. It's not an area that I feel comfortable going overweight at the moment, and maybe rather than thinking about it in individual stocks, e-commerce exposure is different. So got the Goodman Group comfortable with. Office Property Trust, I still like to get a bit more clarity around what the earnings between office trusts and retail shopping exposure. It'd be nice to get a bit more clarity on earnings. So one of the way to spread the risks there is to look at, say, a Spider property ETF, or one of the other ETF providers where you're getting a basket approach to it. QBE Insurance, disappointed, and it's really been a tough space, which we've seen both in QBE and IAG. Beach Energy, my feeling is that oil prices have probably had their rally for the moment, and we'd be looking for a little bit more of a pullback before buying back into these energy names. Stocklands, under algorithm buy conditions here, we've seen record sales, still as part of kind of that urban sprawl development program rather than in a city, and we're certainly seeing that in America, where we're seeing strong earnings numbers among the home builders. Stocklands there also creating a partnership, I think it was with JP Morgan, where they're helping to tilt their portfolio a little bit towards those e-commerce fulfillment center type products, and I think that in part has helped to drive this recent interest in Stocklands. But again, good earnings result to comb through the results. Cube Holdings, Fair value resistance here at around $3. We like the story 2 to 3 years out, but recognise there's probably not much growth in the short term there in Cube. Northern Star still think that gold's consolidating, has been for 2 or 3 months, but likely to break out and trade higher. Newcrest still on the buy side there. Aurora is under buy signals, had a weak day today, came back under the moving average. So just give this a little bit of space at the moment and we'll see how that consolidates, and I'll revisit that on the blog. Mirvac, one of the property names that switched to buy conditions. Qantas under buy, but again hard to get visibility there on earnings. Saracen we like because of the merger with Northern Star. Transurban, clearly volumes are still impacted here in Australia and in the US, but I'd be surprised to see Transurban actually come back out and take out that 1280 low. So keep an eye on this, and maybe it's a buy on the dip if we see that 10-20 cents lower than where it is at the moment. But otherwise we hold Transurban in model portfolios. Now we've switched to stocks that are under sell signals. So some of these I'll comment on the short side, but given that not everyone's involved in shorting the market, I won't spend too much time on it. Magellan could be a counter trend trade. It's had a pretty substantial correction now from 65 back down to 48. Could be a buying opportunity there. Rio, hold on to that even though it's under sell signals. Tabcorp looks a bit expensive to me, but global gaming's been a real wagering and sports betting's been a real sort of preferred exposure at the moment, and Tabcorp's been a beneficiary of that. Spark not doing there at the moment. Mineral Resources looking for a more material pullback before we add that. Crown struggle with that on an earnings visibility. Coca-Cola looking for the European entity to increase their takeover offer price to drive that a little bit higher. Seek would like to see more detail around the upcoming earnings before getting too sort of bearish or bullish on Seek. It surprises me the strength that's already been in the share price. Reece maybe getting up towards resistance, but obviously exposure into the expanding housing market trade, if you like. Woolworths we like. Defensive yield, high single-digit earnings growth, 100% franking credit, so Woolworths and Coles, keep them in your portfolios. BHP, hold that for the moment. Ansell, switch to sell conditions. Now, this is one that I actually struggle with. Technically, it's flagging that the stock's made a lower low and a lower high, so I've put in resistance there at around 37, but I'd be surprised that there's too much negativity in the upcoming earnings there. So, in some cases, we've cut Ansell, in other cases, we've held onto it. BlueScope, not doing there, but see resistance under $18. Oz Minerals, we'd like to see a more material pullback. James Hardie, we'd like to see a more material pullback. Zero still hasn't shifted to buy conditions, so we'd like to see a little bit more selling there and a switch to algorithm buy. Telstra is a counter trend trade that I've spoken about. The company came out, reaffirmed their 14-cent dividend, plus they've got the upcoming split in the next 12 months of Infrastructure Co. But we've finally started to see some buying interest across that whole telco space with both TPG and Telstra rallying. So you could stick with. So just jumping back to Telstra, for long-term investors, just hold the stock because the breakup is going to unlock value. If you're looking at a shorter-term trade and you've got into it just because it's one that I flagged as a counter-trend trade, it's above the average. As long as it stays above the average, stick with it and just see how much higher it rallies. Bendigo, cautious on the regional banks. Commonwealth Bank, cautious there. ANZ, cautious. Westpac, cautious. NAB, cautious. Bank of Queensland, cautious. Medibank would like to see more evidence of, yes, they've had push through the premium upgrades of around about 3%, I think, from memory, but still the earnings trends for Medibank and NIB were not good coming into the last results. I'd like to see more evidence of a turnaround there. Centre Group up against resistance until we see more clarity on what the earnings look like. Same for Vicinity, under sell conditions, not doing there. Macquarie bumping along across this top here at around this 140. Now I find it interesting that Macquarie so significantly underperformed Goldman Sachs, and if you get a chance, type in Goldman Sachs, have a look at the chart of it and compare it to Macquarie's movement just over the last 3 or 4 months. So it may suggest that Macquarie's running into some headwinds around earnings growth at the moment. So again, interesting to look at the upcoming results. Treasury were cautious there. It's undersell signals, and there's not much positive news there. Downer EDI undersell, prefer CIMIC over Downer. Suncorp sell on the short side of most of the regional banks and big Aussie banks now have shifted to the short side of. AMP not doing there, it's undersell signals. Orica counter trend trade, we're sticking with this and monitoring it closely. It is undersell signals, but given the strong performance in Incitec Pivot and the strength in the mining industry, we're looking for Orica to actually recover a little bit more, so not too negative there. ALS up against resistance. Insurance Australia Group undersell signal there at 550, had that small technical bounce, and you may recall me talking about it as a counter trend trade, but now it's moved back below the average, so we step aside and wait for an algorithm buy signal before really adding that into model portfolios. Dexus undersell signals, you can see there the algorithm signals at the top. Now again, Brambles, not too often I'll talk about buying or holding stocks that are undersell signals, but Brambles I'm pretty comfortable with. I'd be surprised if the upcoming earnings results disappointed. The company recently came out and reaffirmed their 3 to 5% earnings growth, so at around $10.50 Brambles should be good value and find support there. Santos, give that room just to correct a little bit lower. We're assuming oil prices come under pressure. Challenger, I don't like it, so for me that sits on the short list at $7. South 32 getting a little bit expensive now. Atlas not doing there at the moment. That's undersell signals. Star Entertainment, Star and Crown. Really, you struggle to see how their earnings support the share price rallies and whether the market can look through the upcoming disappointing results. We'll have to wait and see. Woodside Petroleum, it'd be nice to see a bit more of a correction now and an algorithm buy signal before we get aggressive on that. Reliance Worldwide not doing there at present. Horizon, obviously exposure to coal. Queensland Rail, I'd spoken in detail on past recordings about how they really had no revenue growth. They're paying out 100% of their earnings in dividends. Any slight slip to earnings puts the dividend under pressure or increases the debt load for the company, and we've seen this stock make lower lows and lower highs. The last switch was algorithm sell signal there at around $5, now pushing down to $3.80. Could get a little bit of yield support, but the underlying story there's hardly attractive. Likewise with AGL. Oil Search, look for a correction lower and that'll switch back to buy conditions. Wally's, same thing, little bit more downside and then we'll see that switch back to buy conditions. Boral up against resistance at $5. Incitec was one of the breakout trades, so we like this even though it was under sell conditions. The reason why we're attracted to this was the company had no problems getting away their capital raising, shoring up the balance sheet, and we're seeing global fertiliser prices remain very strong. Origin, counter trend trade, now back below the average, so we become cautious on this and just see if we get a little bit more of a sell-off before we revisit that. Nine Entertainment, I think resistance at around 250, be cautious. Ampol resistance, so the strategy there was sort of 25 as fair value, it was undervalued. $30 was overvalued, ran in a resistance at around that 31, and we've seen it correct a little bit lower. The company has finalised, I think it's a $300 million placement, and there we are back to TPG. So just to finish tonight's shortened recording, given the 4-day weekend that many are having with Australia Day tomorrow. But just to recap, coming into tonight in the US, we'll be taking a look at how the Nasdaq and the S&P behave. The really thick of the earnings begins Tuesday, Wednesday, Thursday this week in the US. I'll update you on the blog. When we look at the index, it's above the moving average. Really that support line we bring down, put underneath that level. Let's have a look at the low there of 6794. And I'll update that as 6794 support. And we want to be willing to stay bullish those stocks that I've mentioned in today's recording as long as the index stays above that. If we start to see the Nasdaq roll over as well as the XJO break support, come back below the moving average, then given the backdrop of the high PEs and the risks around whether earnings growth supports high PE valuations, still got to be a little bit defensive with the way that we're positioning portfolios. Thank you for listening in to today's recording, and if you'd like to know more about the brokerage account service or just have a chat with me about the overall investment strategy in the market at the moment, please give me a call on 1300 614 002, and again, enjoy your Australia Day celebrations.